Let's get some more analysis on this. Paula Penkal, who covers Micron for Bloomberg Intelligence, is with us now. Paula, talk to us about sort of what really stood out to you in what seems to be a very strong report.
Sure. Well, look, they beat on revenues, they beat on margins, and guidance is above expectations. I would say that this is definitely it's become a strong secular growth story supported by strength in data centers and auto market and 5G markets. All of this is driving demand. What really stood out during the quarter, though, is a couple of things. Margin definitely exceeded expectations, and I think we're all sort of expecting some sort of supply chain issues going on, particularly in light of the Ukraine war, and no one's really clear on how much that is impacting the semiconductor supply chain. These margins, or this 47.2% margin, exceeded the high end of expectations, and I think that points to just a very good control over supply at this stage. The second thing that I would point out is they did not raise their dividend, and I think the market will be a little concerned about that, but they did do some share repurchases and to return capital to investors, so that's good.
It's interesting that, of course, Paula, at this time, we're also seeing not only a reinvestment in their own investor base, but an allocation of capital towards expanding, continuing to boost its own supplies. There was, of course, debate whether or not they'd build more at home, invest more in the United States. Of course, the CEO of Micron and the company itself make a big fact about their presence in Boise, their presence in the United States, but also that they have a diversified supply chain. How diversified is it right now?
Well, I think they are quite diversified, but they still have the majority in terms of getting their actual supplies, but they are still concentrated in terms of their manufacturing facilities predominantly in Southeast Asia. Now, they do have their large R&D facility in the U.S. and one smaller manufacturing facility here. They do need to diversify, just as the rest of the semiconductor sector does. The question becomes, with the chip space, particularly for memory chips, the economies of scale are such that to build a new fab capacity, to build a whole new facility would flood the market with supply. And if you look particularly in the DRAM space of memory, it's pretty much an oligopoly, right? And they keep really tight control over supply to the market. So while Micron keeps talking about, building out supply and taking advantage of the CHIPS Act and perhaps getting subsidies to build new capacity, I think they're going to be very cautious about that and bring it on very gradually, because in the end, demand will determine how much supply they build out.